So I wanted to kind of give my own analysis of the Bitcoin price chart and like cycle theory. And I think this is the commonly believed one where this is one, two, and then the third cycle, and then the fourth cycle in 2021, making us in like the fifth cycle now. Well, it also makes sense from this point of view as well, where you have the first cycle here, and then this is the second cycle, and then the third cycle is actually 2017 into 2021, and then we would be entering the fourth cycle right now. And I can show you that this makes sense because you can take this fractal here from before and you can move it up into this area. So there's two ways to do this. You can take this and you can see like the first cycle from the bottom to the top matches perfectly with 2021. So the bottom here and the bottom on the previous fractal both come up to this high right here, the end of the first cycle, as well as the end of the third cycle. Like this is the same height right there. There's the top, there's the bottom. And you can do this again by moving the fractal down here, and you have the bottom in the same area, and then you move this over here and it aligns perfectly with the 2017 top, and then you move this over here and it aligns perfectly with the 2021 top. And you can even see it go through like pretty much the same kind of like corrective phase. Like if you look at this area, you can see it's like correcting pretty aggressively, and then it kind of like back tests like right here. So like there's the top, there's the crash, and then the back test, and it waddles and it goes up. And when you look at what happened here in 2017, it's like there's the crash, it goes up, it back tests, it waddles, and then it goes up. And so if you move these fractals closer together on that same point, you have to stretch it out kind of far to see it, because it's like it's happening in a faster time frame, which doesn't invalidate it, because it's like these fractals can happen instantaneously or take a long time. And that's what we see here is like this peak here. You see the top of both of them like lined up like perfectly together, and then you just slide it over here and it's like right along with the bottom. And so then it kind of out of this bottom pops up and then crashes. And so that's what you're looking for here. Pops up and then crashes. And so like you can get a little clearer picture of what's going on when you just like zoom into this area previously. So the top comes in and then there's the crash, and then out of the crash it rises and then back tests again. So it's really clear to see there. And so that brings us to now, like what's going on right now. And it does seem to me like we're in like one of these like explosive beginning phases of some type of rally. And I'm not saying that it's going to go like up to $1 million, but when we look at the prices and compare them, we can see like the same kind of structures unfolding. Like here you have this SOS coming off of the bottom, so we'll match that up. And then this is the SOS coming off of the bottom right there. And so you match them up and it's like the cycles are perfectly aligned like with that first peak. And so just to make this less confusing, I'm just going to take like this part right here, this second cycle here, and we're going to bring it over into the same area. And so what we can see is like, well, this is definitely going to get broken up into two halves. So like cycle 4 is going to do something similar to like what cycle 2 was, where it did this like double kind of thing. And so this part up here and like this part up here are going to be like more like towards 2029. And so when you match them up, you get something around like anywhere from 300 to like over $1 million, which over time, like you're going to have diminishing returns. And so I don't really think it's going to go that high. And if it does, maybe it takes longer. Because like the general picture you see, like when you zoom out really far, is that it's kind of slowing down, like it's getting diminished returns over time. Now, so unless this first part of this fractal ends up taking till 2029 or 2030 or something to complete, well, yeah, it's probably not going to go that high. But I mean, maybe that's what it is you have this playing out until 2029 or 2030. So it would look like, I don't know, just ridiculously stretched out like this. So hopefully that's not too confusing. And we're going to go over to the Dow Jones. And we can see this is the entire history of the Dow Jones. And what I have are the solar cycles mapped out for the Dow Jones. I'll link this back in with Bitcoin in the end, and hopefully it will seem a little bit more clear, like why this cycle could last, I think, at least until 2025. So the solar cycles, these are like 10, 11 year periods that happen, and they're in harmony with like the sunspots that are occurring. Like this is the picture of what's going on right now. You can see this one started in about 2019 or 2020, and we're pretty much in a peak, and it's projected to kind of come down from here. So that energy doesn't like totally 100% translate like to highs and lows in the stock prices, but you can see what goes on in these solar cycles. And basically the way I have it figured is if you bought the solar cycle and then sold the end of it, what this looks like. And pretty much, I believe every single time, if you did that, you would have come out profitable, which maybe on a chart like this, where it's just been going up for 100 years, is not like a miracle. But you have to admit that there is definitely something to do with like the timing of the energies when they come in. For instance, one of the most obvious examples of this is the solar cycle ending, coming to a minimum exactly during the great financial crisis right here. And then also again, right before C19 happened. So like had you sold the end of the solar cycle, you would have been able to miss the C19 crash and potentially buy it. Same thing goes for this. Had you sold towards the end of the solar cycle, you would have been able to buy the beginning of the next one, hopefully avoiding the crash. And we can also look at like these red lines here, which the red lines correlate with like the peak energy in the solar cycle. And so this is for all of the past ones where all of the peaks came in. They're not always perfectly in the center, but what you start seeing here also is that like this one was a pivot point. This one kind of in the middle. This one was like a top. This one was close to a bottom. This one was definitely a bottom. This one was close to a top. This one was a bottom. This one was definitely close to a top. And this was 1929, like the Great Depression, like right after that. And like if you sold right here at this high peak energy, everyone would have thought you were crazy. So hopefully that's a clear enough picture of kind of how these are working for you over time. And that brings us to now where we have this, and we're in like a pretty solid, steady uptrend here. And there's a lot of like fear narratives going on, like, oh, Klaus Schwab and the New World Order are going to eat your children and that kind of thing. And it's just like, that just kind of seems like something that would happen like when prices are going to continue rising. And it, it always seems like we're like days away from the Great Depression all over again, but I don't know. Things on the macro don't look amazing right now because the yield curves are inverted, and they have been inverted for like nearly 2 years. And so it's like, okay, we should have some type of crash. It's just a matter of like, well, when does that happen? So while there may be a crash, I think that this line here is going to come in probably sometime. It could be like pretty much now or like in this general range. And so being that we're moving on an upward trajectory, then it would make sense that it would be coming in somewhere like on one of these like upward slopes, potentially a top, because this is looking pretty toppy. And for some reason, these patterns of solar cycles, like they look pretty distribution-y as well. Like you can see, like this is just exactly how an asset looks like when it's kind of coming in towards the top. And so it's like, well, this probably is the top. So that means it's like this cycle itself is probably wrapping up, but then we're probably still going to be having another good rally before 2030 when we're at a minimum. And I don't know what happens then. It's like you either have the Great Depression coming in here, like towards the end of the solar cycle, or like, I don't know, maybe it's a continuation of what's going on. This is another really interesting way to look at this too, is that Bitcoin hasn't existed for very long when all things are considered. And so this orange line here is the Bitcoin cycle. And so when you compare it to what's been going on in the Dow Jones, it's pretty clear that you can see that like they both kind of like rocketed out of this area here, and then that's when they kind of more like neutralized, and you can see that it's just been like pretty much like the same asset over the course of the years as far as like liquidity flow, not asset price. Obviously Bitcoin was the good investment. And so when you compare this in the same solar cycle, it's like, okay, so even if you do get like some kind of like a big crash here, it's just like, yeah, we could still continue on like that. It's like still the same solar cycle. It's just that historically, you do kind of want to try to find your way out of these markets before they end, kind of balance it with what's going on in the TA. And so interestingly, Christine Skinner, which I talked about her in the last video, she was saying that her research suggests that November 2025 will be a high for Bitcoin, which that seems like a pretty long ways to me. And like for some reason, just like on an emotional level, it just seems like, I don't know, it just seems like this isn't going to go on for like that long. But like, I don't know, when you look at it like this, it's right where the cursor is. That's really not that long. So being that we have just looked at like what's going on historically in the Bitcoin cycle, it's like we're in one of these explosive parts if this cycle theory is true, and there is plenty of the solar cycle left over. And so another way to look at this, and I think a lot of people are paying attention to this indicator right now as well, is the Fed rates. And the typical thought process about the rates is that like when they cut the rates, it's really good for the market because that means more profit for the companies. And when you look at the charts, that's really actually not what's going on, at least in the recent years here. So you can see after the dot-com bubble here, they lowered rates and then the market crashed in that same area. And then they started to raise rates and the market climbed during this time here. And they paused rates, and this is kind of like where the market came in and did the finality of its rally just afterwards. And so they start cutting rates just slightly, and the top comes in, but as they continue to cut rates, it leads to the market crash. So then they keep rates flat for years and years and years, and the market rallies and rallies and rallies. And then they raise rates right here, and the market continues to rally up. Continues and continues and continues till right before C19 when they drop rates, and then the market crashes and they continue to drop rates. Markets continue to rise as the rates are flat in this period in 2020 to 2021, and then they raise rates. Here we kind of go into a bear market, but then it turns around and reverses as the rates are kind of near their peak and leveling out. So you can see in these last couple of years, especially since the dot-com bubble and the GFC, that the rates are not really the way that retail imagines them to be. It's like the paused rates seem like they're the most bullish thing really ever. And just to zoom in here on the Bitcoin chart next to the Fed rates, you can see the paused rates ended up being the most explosive run for Bitcoin in all of history. And then the raised rates ended up being like the next most explosive run for Bitcoin in all of history. And yeah, sure, this kind of like was a bear market here, but that's probably just because the asset was overvalued itself. And then they drop rates and the market crashes. And then they pause and the market rallies. But that theory sort of like goes out the window if you go back like far enough on the rates, because like what the hell is this area? You have the rates just coming down and down and down and down while the market just rallies and rallies for 20 years. So it's just all kind of like, well, I don't know. The way that it's working right now is this way where they pause and it seems bullish, or they even raise them and it seems bullish. And so I think that's one of the main indicators to look for going forward, because we have like a highly correlated liquidity flow between the Dow Jones and Bitcoin, of course, affects all of the alts. And so if Fed rates have anything to do with it, just I would probably just be chilling until they decide that they're going to lower rates. And when they decide they're going to lower rates, that might be the time to get out. If you look at '08, I mean, once again, once they were first initially lowering rates, the market did kind of go in and have like the little tiny like blow off top, or I don't know if you can call it that, but that's what was going on right there. And so really this video is meant to kind of like show you the grand picture of what's been going on in the stock markets. And yeah, I do think that like the United States stock market might be coming to its finality in the coming years because of the government debt being so high and all of the pretty much known corruption that's going on. It seems very similar to what Ray Dalio describes in his book, The Changing World Order. And like we are kind of coming into those like final times as a world superpower. But showing you the grand scheme of things, this little tiny blip here is what Bitcoin has done. And, you know, like the asset class itself is supposed to be like replacing money as we know it in a sense. And it's just done this tiny little blip here. And it's just like, do you really think it's just going to be done after this? It's like, if anything, it's probably the safe thing to be in. With a correlation so close to this, you can't really say that it's going to be like a safe haven when shit hits the fan. I thought I would lend this perspective here that like these cycles may not be exactly what everybody thinks they are, and if they are going according to how I see it here, then this one could be pretty good. Like I said, factor in diminished returns, but we could have a pretty interesting back half of this year.